Hey everyone, me Kevin here. So what's going on? Is the housing market actually falling? What are the latest indicators we have? And are we going to have an opportunity to go shopping for real estate? Because as many of you know, I am launching a Series A investment round. This is not a solicitation for that, it's just a heads up that I'm launching this in August. We're hoping to launch it the first week of August for course members. It might end up being the second week of August. We just have to make sure everything is perfect and ready to go for it. But it's going to be all about investing in real estate. And so there's going to be this beautiful mix of SaaS and tech and real estate. It's a really, really exciting project that I can't wait to share all the details with you on. And course members will have the first dibs at investing in this. But what's crazy is we're really monitoring the real estate market on a regular basis. And one of the most fascinating charts that have sort of recently come my way is this one right here. This particular chart shows a buyer pipelines, or it's sort of an estimation of the buyer pipeline. And it's put together by the National Association of Home Builders. It kind of gives an idea of the traffic of how many home buyers are actually out there looking to buy homes. And this figure rarely falls under a special number, which is known as 40 right here. It rarely falls under 40. In fact, if we look at this dotted red line, we can see times that it's fallen under 40. One time was over here in the about 94, 95 period. Then we have another time over here very briefly in the early 2000s. And usually when we fall under 40, we don't stay under 40 for very long, with the exception of the Great Recession. The Great Recession was really the first warning sign that when in 2005 we plummeted on this sort of homebuyer traffic, we really saw this 6-year hole of homebuyer traffic. And that was really rare because, again, usually when we fall under 40, it's a very short-term drop. In fact, we can look at COVID over here and we can see how short-term that drop is. With the exception of the Great Recession, it's very rare for this measure to be under 40 for very long. Now, this doesn't mean that we're going to go straight up. In fact, we could basically see something like this where it takes a year or so to get that home buyer traffic back up. It's probably going to be dependent on mortgage rates and getting mortgage rates instead of moving up to actually move down, which we'll briefly talk about in just a moment. But it's very fascinating that now we're here and that we've actually seen this chart fall under 40 again. And it does send us some signals that, okay, either home buying is going to be in this sort of prolonged period of a lack of competition, like what we saw for 6 years starting in 2005, or it means we're going to have a very short-term opportunity, maybe the duration of about a year or to 2 years, which is actually more closely resembling what I expect. Our internal plans are that we're going to have about a year or two to really go shopping for real estate. We're not going to have this 5 to 6 year pain that we had in 2008, even if prices actually begin to show some year-over-year declines. I'm not expecting something like a 2005, 2006. So I wouldn't be expecting homes to come down 40 to 50% in price. I'm just not seeing that. At most, I would expect at most maybe a 20, 22% correction, but probably more of a base case scenario is going to be anywhere between -5 to -15%. We won't get into all the details and numbers behind that right now. You can watch some of my other videos on real estate here to understand why. But this here, and all of these videos, by the way, they go into a real estate playlist, so you can watch the real estate playlist. Anyway, this is really interesting because it does really pique my interest in that, A, we saw this coming, right? We saw this drop coming, which is great, which is why we started positioning the way that we're positioned now. And we're ready to go shopping. I don't think it's quite yet buy time. I think we're probably still waiting for some of these comps to roll off. And we're probably still on schedule for something like a Q3 to, I'd say, a Q1 buy time. That would be Q3 of 2024, Q4, or 2022, that is, this year. Q3, Q4, and then Q1. So that's sort of a target. Now, what are some of the other things that are going on? Well, we just had some leading indicators come out. Leading indicators are so important in real estate because real estate moves so slowly. Usually when you get these national, like year-over-year home prices or home price appreciation measures, like, oh, home prices went up 12% year-over-year, March to March. It's like, okay, like, nobody cares. I want to know what happened from June to July. Like, how are those home prices moving? Are they stable? What's going on, right? And these are things that we could survey on a local level, which we do. But every region has to kind of do this independently, and so it takes a little bit of effort. But those are ways that we can get quicker data. But home builders don't give us quicker lagging indicators. What they actually give us are leading indicators. So new U.S. home building activity fell to a 9-month low in June. Multifamily construction actually gained ground, which is interesting because that means potentially more supply for multifamily, and that's because rents are still going up, which I expect as well. I expect rents to go up and prices to kind of converge down slightly. I do not see rents going down, so this makes sense to me. However, we're seeing single-family activity dropping to a 2-year low. And in my opinion, that actually creates some opportunities in the single-family space, because you're starting to see more home builder concerns about the single family market. Now, it could be argued that, hey, if you have more supply of multifamily buildings, wouldn't that drive the price down more here? Or if you have more supply of single families, which it looks like you're not going to have, wouldn't that drive the price down? So you're not getting as much of an opportunity here. That is a very wise question to ask. But the answer to that is no, because these numbers here, these starts, are going to take about 3 years before we see this kind of supply. Hey, I know you like 50% off, and if you like research and earnings transcripts and being able to annotate easy to save PDFs, you want estimates for forecasts, for stock analysis, for companies, folks, Seeking Alpha is a wonderful tool for you. I use Seeking Alpha in conjunction with other services like Bloomberg, but Seeking Alpha is actually affordable, unlike the Bloomberg Professional Terminal, but you get some incredible information on Seeking Alpha to where even though I have other services, Seeking Alpha is in my repertoire of research. And if you want to get 50% off with Seeking Alpha, make sure to go to metkevin.com/Seeking Alpha now to get a special 50% off. That's metkevin.com/Seeking Alpha. So I don't like to look at this home builder statistic as saying like, oh yeah, we're going to get this big dump of construction inventory. It's going to take at least, in my opinion, 3 years for us to actually see these buildings. Like the opportunity, in my opinion, to buy is going to be over by then. I mean, we'll just be back to sort of a normal market. The depressed market opportunity to buy, I think, will be over by then. And so what this is more of is a tell of what are home builders feeling in the market. And when we get a miss, which wasn't much of a miss, it was a seasonal adjustment of 2%. We got 1.559 million units. We were expecting 1.58. Permits for these future housing constructions fell 0.6%. Not that big of a deal. 2%, 0.6%. They're relatively small numbers, but what they tell is sentiment is softening. And usually what happens is you see sentiment start softening, buyer demand starts softening, price drops to increase. Then it takes about 3 months where sellers are like, I just need to sell it, and they're selling for lower prices for you to actually see price reduction show up in closing. So it does take some time, but we are starting to see the indicators that say, yeah, the problems are on their way. How bad they're going to be, we don't quite know yet. But we see the percentage of active listings across the nation much higher than where we were in 2019 and in 2021. So the black line is 2022, and we see substantially more active listings with price drops. This, by the way, is the July, let's use a darker color there. This, by the way, is the July 10th data pull from the Redfin Data Center. And so you can explore this as well. So we're seeing the sentiment declines. We're seeing mortgage rates up. We're seeing pending sales start to fall, though pending sales are kind of starting to fall in a little bit of a seasonal pattern here. You could just see that we've kind of decoupled over here a little bit faster than ordinarily we would. But you've got a little bit of a seasonal fall here. You've got price drops, again, active listings with price drops. We saw this chart already. This just shows you areas like Austin, where you're knocking on the door of 12% active listings of price drops. Tampa, Florida, 12%. San Diego, somewhere around over 9% over here. Boise City, Idaho, somewhere around over 15%. And a lot of this really being driven by those higher mortgage rates that we're seeing. This was the beginning of the year for the 10-year Treasury yield right over here, which tends to relate to mortgage rates. And so we could see this really strong uptrend here in mortgage rates, though a lot of folks are expecting now that this right here, this 3.5%, was probably the peak for 10-year Treasury yields, as we do expect inflation to finally end up coming down. And that's why we're seeing Treasury yields right now sitting right around 3%, giving you a mortgage of somewhere around 5.5% to 6%, still about 3% more expensive than what it was in December, which is substantial. So what are we seeing in the market? Well, we're definitely seeing a sentiment shift, less buyers, substantially less buyers, especially with the new home builders. We saw that in the chart. We're starting to see home builders rein in a little bit, more price drops, more competition for new construction. We saw the Lennar earnings report where they're saying there are 3 categories of sort of catastrophe that they're seeing with how competitive they have to be. And one of the unique things that's happening now is a lot of sellers are actually doing something known as buy downs. And this is kind of really annoying because it's very difficult to see in the data. A buy down is basically when the seller says, hey, buy my house for $6,000. And the buyer's like, no, I don't want to pay that. I want to pay 3% less, and I'm not paying a penny more. I'm only going to pay $582,000 for the home, which would actually represent maybe a 3% decline in home values. But the seller's like, well, rather than lower my price, how about I just give you $18,000 to buy down your interest rate? And then it's kind of as if you bought the home for $582, but it actually shows up on Redfin and Zillow as me having gotten $600. So there's a really big sort of gamesmanship element that happens in real estate, especially new construction. This is really prominent in new construction, that can really delay our ability to see price drops. So it's still going to take time. I think we'll get more clarity over the next 2 to 3 months, and we're already starting to see more of that clarity with some of the shifts. Though interest rates coming off their insane rise, where at one point the 10-year Treasury was at 3.5 and mortgage rates were at like 6.5. Coming off of that insane rise is actually really bullish for real estate and does limit the overall potential downside we could be seeing for real estate. So no huge Armageddon, a big shift, absolutely. How much of a decline in prices is this shift going to lead to? Again, my guess, if I had to pick a base case range, 5 to 15% declines. Much more than that, maybe 20, maybe 25%. More than that, very unlikely in my opinion. And especially if we see yields continue to go down, then that pushes us down the range. Obviously, nobody has a crystal ball, but these are my expectations. If you want to see me do fundamental analysis, take advantage of the 50% off coupon code expiring. Link down below, expiring on July 28th. You join me for real estate fundamental analysis and stock fundamental analysis every day the market is open, and I answer your questions. Thanks so much for being here. Appreciate you, and we'll see you in the next one. Goodbye.